In tandem with the recent surge in the cryptocurrency market, BlackRock, the world's largest asset manager, has made a significant move by filing for a spot Ethereum exchange-traded fund, ETF, with the U.S. Securities and Exchange Commission, SEC. This strategic step not only underscores the evolving dynamics within the cryptocurrency space but also signals a growing institutional interest in digital assets. The introduction of an Ethereum ETF by BlackRock marks a pioneering venture, representing the first of its kind in the United States. This development introduces a novel way for investors to gain exposure to Ethereum without the need for direct cryptocurrency purchases. The market's response to BlackRock's filing for an Ethereum ETF has been nothing short of robust. Almost immediately after the news broke, the price of Ethereum surged to its highest level in the current year. This rapid and substantial uptick in Ethereum's value reflects the positive sentiment among investors regarding the potential institutional adoption of this cryptocurrency. However, as with any market movement, this surge was followed by a subsequent pullback, prompting a closer examination of the factors at play and the broader implications for the cryptocurrency landscape. BlackRock's foray into Ethereum ETFs. BlackRock's decision to file for a spot Ethereum ETF is a strategic move that aligns with the evolving narrative surrounding digital assets. As the world's largest asset manager, BlackRock's foray into the Ethereum market signals not only a recognition of the growing significance of cryptocurrencies but also a proactive effort to offer investment avenues that cater to changing investor preferences. This Ethereum ETF stands out as a pioneering initiative in the U.S., providing investors with exposure to Ethereum's price movements without requiring direct ownership of the cryptocurrency. Signaling institutional interest. The filing of an Ethereum ETF by BlackRock serves as a strong indicator of the increasing institutional interest in the broader cryptocurrency market. Historically, institutional players have approached cryptocurrencies with caution due to regulatory uncertainties, volatility, and concerns about security and custody. BlackRock's move suggests a notable shift in sentiment, reflecting a growing willingness among institutional investors to explore and engage with digital assets in a more direct manner. This development follows a broader trend of institutional involvement in the cryptocurrency space, with major financial institutions increasingly considering cryptocurrencies as viable investment options. Market response: Ethereum's surge and subsequent pullback. The announcement of BlackRock's Ethereum ETF filing had an immediate and pronounced impact on the market. Ethereum, the second-largest cryptocurrency by market capitalization, experienced a surge in its price to levels unseen throughout the current year. This surge can be attributed to the positive sentiment surrounding the potential institutional adoption of Ethereum through the ETF, as well as the broader market enthusiasm driven by the ongoing developments in the cryptocurrency landscape. However, the subsequent pullback in Ethereum's price underscores the inherent volatility and speculative nature of the cryptocurrency market. Market participants, including retail and institutional investors, responded to the initial surge by adjusting their positions, leading to a temporary decline in Ethereum's value. This pullback prompts a closer examination of the factors influencing short-term market movements and highlights the need for a nuanced understanding of the cryptocurrency market's dynamics. Analyzing the factors behind Ethereum's price movement. To understand the market dynamics surrounding Ethereum's surge and subsequent pullback, it is essential to consider a combination of factors. Firstly, BlackRock's filing for an Ethereum ETF generated significant excitement among investors, leading to a surge in demand for Ethereum as they sought exposure to the cryptocurrency through traditional investment channels. This increased demand, in turn, drove up the price of Ethereum. However, the cryptocurrency market is known for its sensitivity to speculative trading and short-term price fluctuations. The initial surge in Ethereum's price triggered profit-taking activities among some investors, contributing to the subsequent pullback. Additionally, external factors such as broader market conditions, regulatory developments, and macroeconomic trends can influence cryptocurrency prices. Therefore, a comprehensive analysis of the cryptocurrency market requires a multifaceted approach that considers both internal and external factors shaping investor sentiment and market movements. Implications for the cryptocurrency landscape. BlackRock's filing for an Ethereum ETF and the subsequent market response carry broader implications for the cryptocurrency landscape. The move not only validates Ethereum's position as a significant player in the digital asset space but also opens the door for further institutional involvement. As institutional players continue to explore and engage with cryptocurrencies, the market is likely to witness increased liquidity, improved price discovery mechanisms, and a maturation of trading infrastructure. Moreover, the introduction of an Ethereum ETF in the U.S. provides investors with a regulated and accessible avenue to gain exposure to Ethereum's price movements. This development aligns with the broader trend of bridging traditional finance and the cryptocurrency market, offering a regulated framework for investors seeking to diversify their portfolios with digital assets. The potential approval and launch of the Ethereum ETF could set a precedent for similar offerings tied to other cryptocurrencies, further expanding the range of investment options available to market participants. BlackRock's Ethereum ETF in the context of cryptocurrency adoption. BlackRock's strategic move into the Ethereum market reflects a broader trend of increasing acceptance and adoption of cryptocurrencies within mainstream finance. Institutional players, traditionally cautious about venturing into the cryptocurrency space, are now actively exploring ways to integrate digital assets into their portfolios. BlackRock's Ethereum ETF filing comes at a time when regulatory clarity and institutional-grade solutions are gradually becoming available, making it more feasible for major asset managers to participate in the cryptocurrency market. The filing also positions BlackRock as a trailblazer in offering innovative financial products that cater to the evolving preferences of investors. As the cryptocurrency market continues to mature, the introduction of ETFs linked to specific cryptocurrencies provides a bridge between traditional investment instruments and the burgeoning digital asset ecosystem. This intersection of traditional finance and cryptocurrency markets could pave the way for a more seamless integration of these two worlds, fostering a diversified and inclusive financial landscape. Conclusion: navigating the evolving cryptocurrency landscape. In conclusion, BlackRock's filing for a spot Ethereum ETF represents a significant development in the cryptocurrency market, signaling growing institutional interest and providing investors with a regulated avenue to gain exposure to Ethereum. The immediate market response, characterized by a surge in Ethereum's price, reflects the enthusiasm surrounding the potential institutional adoption of digital assets. However, the subsequent pullback underscores the inherent volatility of the cryptocurrency market and the need for a nuanced understanding of the factors influencing short-term price movements. As the cryptocurrency landscape continues to evolve, BlackRock's move into the Ethereum market aligns with broader trends of institutional acceptance and adoption of digital assets. The introduction of Ethereum ETFs opens new possibilities for investors seeking exposure to specific cryptocurrencies through traditional investment channels. This development also underscores the need for market participants to navigate the evolving landscape with careful consideration of both short-term market dynamics and the broader trends shaping the future of cryptocurrencies in mainstream finance.